Good Fed day, everybody. Everyone ready? How you doing, AJ and Ingmar and JP and Jays? Everyone doing okay?
Morning, Dale.
And Ryan?
How are you, mate?
Pretty good. So, can you see my screen here, Ryan?
Yep, all good, mate.
Good early morning, Dale.
Good early morning. I could barely say early. Kman, how are you, buddy?
You don't have to say early. It's nearly evening here.
Okay. Good early evening. So we have just a little development. I think it might be significant as a 3 drive in the gold silver ratio and a little follow through today. And I was thinking about this. There's no fear on the board of the Fed this morning. You have even the euro up, your metals are up, stock indexes are up, although there were some decent earnings yesterday. And, I was looking at Google. Blake showed a lot of the FANG stocks yesterday. And he said, yeah, Google sure looks like we could, get a new low out of it, how weak it looked. And, actually it did. We spiked it. So I don't know, guys. I'm thinking if I was Powell and I saw all the markets up, knowing, what the consensus is of 75, it's no surprise, no fear. I know a lot of it's a statement, but let me go around the horn and ask you, if the markets were down sharply, I might have a different view. But, even the S&Ps held only 23% back on that pullback in the S&Ps yesterday. Will he go one?
No,
And, kind
I
of
don't think
shock
so.
the
I think
market.
75 is what the market expects. 75 is what we likely will get, and then we will see what happens during the press conference.
Okay, because I don't see markets worried about what he's going to do.
No, that's
at
true.
all.
That's true, and yields are hovering above those supports.
See the
Yeah,
chart.
there is not a lot of fear, as you say, about what is going to happen today. But nevertheless, I think it's a relatively important meeting just because of the lapse of time between this one and the next one, which is only 21st of September. So that's nearly full 2 months.
Yeah.
So he has to explain what's going to happen, right?
And good morning, guys.
Good
But I have
morning,
to mention, don't we have Jackson Hole coming up in a few weeks too?
And Jackson, he can
Jackson
do,
Hole's
he
where
can
they
do an
were.
extra meeting.
Yeah, he could definitely change his messaging between here and there. But you are exactly right, Kman. We have what, a month and a half, almost 2 months before the next Fed meeting.
Quite 2 months
quite
minus
some
a
time.
week, so at the 21st.
Right. Yeah. So, hey, good morning, everybody. I wanted to
Blake.
let you guys all say, talk, but I had to throw that Jackson Hole is coming up. And
what do you think, Blake? Wouldn't you feel more sanguine about 75 if the markets were all down and kind of worried about it instead of up in its face before the meeting?
I'm not. I'm personally, I'm not so concerned about where stocks are at right now. I think stocks are just kind of mid-range. It's more of the, it kind of going back to what Kman was just saying. Since we have the next Fed meeting is going to be in September, and we're coming off of a very hot inflation, CPI data, but it looks like, and we've been talking about this the last couple of months. Jobs data is probably going to start to weaken. We're starting to see signs of weak data in PMIs and other data sets. And so there's a long time between now and September for the Fed to really, quote unquote, pivot, right? So I personally, I think they're coming off such a strong piece of data that they can't shift to dovish. So I'm sitting here looking at stocks going, well, it's hard to really be a buyer here, even though I have, I still feel that we can bounce. It is hard to be a buyer here without any, without knowing what he's going to say today, right? So I guess that's the point.
It's hard to do almost anything without.
It is, and but I'll go more into that in a minute. I'll let you guys continue on. I know Ryan's here, Steve is here, Stelio's here.
Wow.
And I'm sure everybody's got some things to say. I'll come back to me at the end.
Well, Steve, what do you think? You think he might, surprise the market with the 1% hike today?
I have no idea.
Okay, that's an honest answer. Stel, you can look into the future.
I am. No, seriously, I don't think they want to disturb to surprise the market. Basically, there's no reason for them to hike more. 75 is already a pretty decent pace, and there is definitely no reason yet for them to hike less. We are seeing data coming in a little bit mixed, but markets are doing okay, and we talked about this on the Flow Show this morning. The market reaction from going from 0 rates to, well, we're going to be at 2.5 today, has been okay. Equity markets have not crashed; they've come down in a very controlled manner. It doesn't look like panic in any way. So why disturb the markets? I think they're going to do 75. Obviously, if they do 50, markets are going to fly. And we wait for the press conference to see, with the statement, basically to see what they give us in terms of guidance. Are we anywhere close to the end, or anything that they can give us?
Yeah. Okay. Well, Euro, if we didn't have the Fed held 50%, I'm still thinking we go 61.8. So, I'm hoping that the dollar pops, Fed-induced dollar pop here. Also, Canada's really, something else that if I had a rally back towards 130, I would try it. That may have been the high up there at that 132 level. So, I'm looking for retracements, and I'm going to give the dollar the benefit of the doubt that it may have topped up there and that we're going to have some type of failing rally. And if not, if the dollar makes one more new high, I don't think that's going to be, you'll have a lot of divergence if that happens too. So anyway, just my guess for today, and the commodity currencies still look good. How about yen, Kman? It's trying to bounce back with a strong dollar 2 days in a row, but this little bounce, this looks feeble to me. But you know what? It looked feeble here too. And then all of a sudden it did this.
Yeah, I think the dollar yen may be the cleanest trade on the FOMC, since we compare the Bank of Japan to the Fed, and all the rest is not moving that much for the time being. We got a bit of a yo-yo in the energy and the commodities, but it's not moving that much. So that may be the cleanest trade, especially if there would be some weakness acknowledged, and those the US 10s would drop below 272, 275. I'm just saying it may be the cleanest trade, because I'm a little less convinced that euro dollar will be ultra clean, because we've got enough problems in the euro. Even if it's for a weaker dollar, I'm not sure that euro is going to be the cleanest trade, but dollar yen should be one of the cleanest trades.
And Aussie, trying to stay outside of this falling wedge here. It's kind of doing what it did down here at the bottom of the wedge. I think the commodity currencies on weakness are the better buys than.
Yeah, don't forget the CPI data came out last night for Australia, and the headline number came in 0.1% below expectations.
Oh,
their core trimmed came in line. Aussie dipped right down to 69 cents as we thought, and then we bounced back. We have to also keep in mind that the Aussie dollar is, it is really a key resistance here, and if for some reason, whatever Powell says today, and I'm going to go over these charts here in just a few minutes.
You would probably buy a break at 68.5 to 68, right?
Well, I'm not necessarily keen on,
Okay.
on buying dips. I'm more keen on buying breakouts today.
Okay.
So this is one of those. If we break above 70 cents, I'm going to be rather aggressive on the upside on a daily close above it. And something we've been talking about over the last couple of days. I know I've actually reduced my position size this morning at 69.50. Going into today, I've been, aggressively long from below 68 cents. So I'm pulling profits ahead of the Fed, but I don't mind adding to gains here. I don't mind adding to winners. Yeah, buying dips, you're going to have to, circle back to me in about a week. So
Okay.
it ain't going to be today.
You could hold your nose and do it, put a clothespin on, or
yeah,
something.
you can always do that too.
Yeah.
I've definitely seen people, doing that type
Yeah.
of trading.
All right, so there's copper. I don't know if you guys have any comment on it. I mean, so far it held that $3 level.
Nice bear flag.
This is a bear flag right here. That's forming. Okay. All right. Oil, Steve. We've tested this real important support level. One penetrated to 3 times. Is it going to hold it?
Holding for now. It's an
Yeah.
important level, as you said, but we break through that. I think we're going to accelerate towards 85.
Okay. Because isn't it like an important support zone, kind of like a closed door, and you put your shoulder into it the first time, you can't move it, and the second time, it has a little give, and then the third time the hinges are starting to come out. That eventually you keep knocking at that door and you'll break it open.
Yeah.
I think it's it's like, okay, we'll let you buy the major support here. Oh, I know you missed it. I missed your market. I'll let you buy it underneath major support. I know you missed this trade too. I'm going to let you get long here because I like you. I want you to get in at a good price 2 weeks later.
Yeah, if only it worked like that, right?
Huh? Well, I mean,
If only it worked like that.
Well, that's why I'm skeptical, because it doesn't work like that. So
I agree with you.
You know what I mean, man?
It usually doesn't.
Yeah. So, the market's making it, accommodating people to buy major support for a little bit too long, in my opinion. Suck them in. Well, 94 is holding. Okay, let's buy it. Aussie yen. I know that's something that you guys are following. This still looks like it could make a new high. I don't know what that implies. Would that be a weaker dollar for it to make a new high here?
Well, I think it'd be a lot of yield movement, wouldn't you think?
Yeah, I think if Aussie yen flies, that means that yields are going to hold up, in my opinion.
Yeah. Do you mind if I take the charts here, Dale?
No.
Okay,
I never mind.
There's a really important chart that I wanted to share today. Hold on, let me get over to the bond market. I think this is a really important chart, which everybody should be paying attention to.
It's everything, man.
Yeah, I mean, what happens with the bond market here? I mean, you can see that very clearly. We have inverted head and shoulder patterns with the 30-year. Here's the 10-year, very similar look. And I think you just nailed it, Kman. I mean, if yields are, if you see bonds, pull back here and yields are rallying, that dollar yen's gonna start looking really perky, and so are all these other yen pairs. I mean, every yen pair where you're talking about. You got you got the euro yen. Even the euro yen is holding up. I mean, and that's saying a lot. I mean, look at the euro Swiss; it's at all-time lows. So you got the euro yen, you got the sterling yen. I mean, this is you got your triangle here. You got the Aussie yen holding up near the highs. The Kiwi yen and even the Canadian yen. We broke out of this triangle, and then we came back and retested these two trend lines right here perfectly. And we're holding it. So I mean, I don't know. I don't know if I'd want to be bearish, especially with stocks holding up as well as they are. I mean, you got the stock market that is holding up above 3,900. And remember, this is a descending wedge right here that has broken out to the upside. You know, it may not have it may not you know has started completing like that move, but it is still holding gains. I mean, you know, any which way we slice it. So, you know, as long as these hold, as long as the stock market continues to hold up here, and if we get back above 4,000 in the S&P, then, you know, you're going to have these yen pairs that might rally as well. But I wanted to ask you guys this. And Ryan, is Ryan even here today?
Yes.
Have we heard from you, Ryan?
You have now.
Oh, okay. Hey.
Oh, I'm sorry, Ryan.
Ryan's thinking about Mega Millions here in the U.S. Ryan cannot get his mind off of what's happening in the lottery situation. And Ryan, I know what you were alluding to in our chat room. And here, let me just go over here. This is the ForexAnalytix chat room. This is actually a conversation that is. This is a conversation that is happening.
Is that the Irish sweepstakes?
No, Ryan was. We were talking. They were hitting me up last night. All the people in the chat room talking about this Mega Millions going on, and then I think everybody is trying to get me to buy a bunch of tickets for the ForexAnalytix community. Yeah. I know what you're alluding to.
Yeah, make sure our names are on it.
One, it would be an absolute tax crap show for me.
We have to do some mule running out the back. You have to get a boat. Listen, if we win $1 billion, we'll find a way to get it out of there. Don't worry.
Yeah.
Yeah. So anyway, I'm sitting there going, oh, I know what you guys are thinking right now, and the answer to your question is
that should be the worst problem.
I'm only buying tickets for Dale, Paulie, and myself. us Americans.
Yeah. Yeah.
Anyway. Like if you buy me one and we win, I'll buy you an ice cream. How about that?
Oh gosh, that would be wonderful. Well, so Ryan, what do you think about the dollar yen? We haven't heard from you regarding the yen. I mean, we've heard a lot of Kman's opinions, which are extremely valuable based on his experience in the yen. But what do you think about the dollar yen here?
Yeah, I'm really only looking at this one for possibly having a short. If we get something that shoves that higher, I think the balance of sentiment and what with the change in tone from the Ministry of Finance, and you know how much hawkish can the Fed actually be. I think selling rallies is the way forward to this. So I'm purely looking, if we get anything up towards 138, I'm looking to now for a short, and I'll run that up to the prior highs in the 139s. That's mostly what I'm looking. I'm not necessarily looking to buy a dip, but hit a rally, I think I'm going to be all over that.
Okay, that would imply, if we get that would imply that the notes are going to break out to the upside. If Brian's right and we get that a failing rally in the end. Yeah,
but even on the looking at yields, you know, the Fed are hiking to 2.5%, and you know, yield's still not above 3%. You know, it's unbelievable. Every time they've turned hawkish or given something more hawkish, or you know, yields have rallied and it hasn't lasted. You know, the price action in yields speaks for itself, in my opinion. It can't hold again, and that's my basis for trying a short dollar yen. If we see all yields pop and dollar yen follows it, I'm going to go with the price action that we've seen time and time again, that rallies in the yields don't last.
Okay, yeah, it's a pretty good looking chart. Potential head and shoulders bottom there.
Yeah, I think Stel was the man who primed bond shorts, wasn't it, yesterday? He was talking about it on the flow show as well.
A great feel for the macro on all of this.
Well, that was actually that was
the lows.
That was actually just as a level, you know, 270. A break of 270 in yields below is going to be huge. And I just said I think it's a great risk reward. Yields were at 272 at the time. I said I think it's a great risk reward to be short bonds or long yields, as long as you have your stop, you know, below there and you're diligent with it. And you know, if it doesn't work out, it doesn't work out. But you know, we're already a few, 6 or 7 or 8 basis points higher. We do have the Fed. I still think the risk is for yields to go higher. I think they have one more leg to the upside because I just don't see how the Fed is going to disappoint yet. They will disappoint eventually, but I just don't see how they're going to disappoint today.
So in other words, you're saying they are going to pivot. And it's funny, I was sitting here talking to you guys with my microphone muted, and I was wondering, I'm like, these guys don't hear what I'm saying. But
no, we don't.
But
that's the best conversations we have.
What's that?
The best conversations.
Those are the best conversations.
They are. They are. Don't. That's you sound just like my wife, Steve. All right. So let's. I'm going to talk about all these key levels in all the big markets, but I do want to say that I agree with you, Stel. I don't think today's the day that the Fed's going to start to. People are calling the Fed pivot. They're not going to pivot today. But they could, and Ryan, you're exactly right. The markets are really looking at the yields continue to go lower, and we see bonds rally, and that's because the market is a future pricing mechanism, and you can see how we are pricing into next year that the Fed and other central banks are going to be cutting. So, and that's, I think that's where the market is kind of leaning at this point. But we'll see. Today's going to be a pretty critical day. But let's go really quick. Let's start off with the dollar, and I'm gonna point out some key developments here. We feel that the dollar is stuck at the 38% retracement. It bounced quite aggressively on Monday. We talked really about that, and I think the dollar is really stuck between a rock and a hard place because we are in an ascending channel, but we have this resistance here at 107.60. We have support at 106.30, which is 38% retracement. But I'd even give it a little bit further below that to offer some support.
It's a mattress.
It's a zone, definitely a little cushion zone there, and a lot of support in the dollar. So dollar, hasn't turned bearish yet, but I think a lot of I mean, you're going to have to really see the euro, do some work on the upside. And gosh, I don't even see it. But anyway, there's the dollar. Anybody have any particular levels you're looking at the dollar before we move along?
107.80 to 108.
Okay, so you'd be selling up here.
Yeah.
Okay, well, I would think that would be, probably about a 50% back of
50 to 61.8.
Like yeah, so you're talking
wrong over the highs.
Yeah, right over there. Okay, all right, fair enough. Let's take a real quick look at the stock market, moving around. And by the way, I know you pointed this out yesterday or today, but let me just show you guys Microsoft earnings. Microsoft is up a little bit. It's not as bad as it could have been, and we're still going to open in this triangle. But you look at Google. Google is lower today, and we had this bear flag. We're actually going to gap down a little bit, or actually we're going to gap up a little bit. So it might have been a false breakdown. So we'll see. Maybe you can probably move it like that, and maybe it's still just kind of in play. But watch these two bellwethers. I think we have Amazon and Apple tomorrow, so that's going to be some more earnings that you need to pay attention to. But really going back into the S&P, and then I want to get you guys' views here. I still see it coming out of a wedge, but we have the upside has been fairly limited because of this week. But we had a false breakdown, remember, a week and a half ago, and so now the S&P is really I think 4,000 is the level to be watching today. Any other views here on the
There was
S&P,
a gap
guys?
up there, Blake, at like 40.18 that it almost filled.
Okay, so we
that
still
was
have
Friday.
some gap filling to do?
Yeah.
Okay.
Yeah. No, it did it. Well, yeah, a couple of handles, but
it's
and Russell still is outperforming.
Horseshoes and markets were close enough is good enough, right?
Yeah.
Okay. Yeah. Kman, Ryan, Stel, Steve, any thoughts on the S&P here?
39 to 4,000, 3,900 to 4,000, and then with a bit of interest around the mid 38s perhaps, and then we'll see how it closes really.
Okay.
A lot will depend on those yields, right?
Okay. Any other opinions? I'm going to move on to the NASDAQ really quick.
I think we're going to get to 4,100 before lower in the S&P.
Yeah,
4,100 definitely remains key resistance. And yes, I would agree with that. There is a decent chance we can see that.
And remember, Blake, you've been asking this question, which way? Next 200 points, I've been saying lower, lower, lower. Now it's the first time I've said higher.
Just my God, I got to take the other side of that. I'm just kidding. No, I agree. That's okay. Sounds good. NASDAQ, you know, the NASDAQ 100, this is, you know, one of the, you know, I think where you guys want to talk about, like, you know, high beta and, you know, what's going to be the leadership here. Just look at how the NASDAQ came out of a triangle bullishly. We came back and retested the triangle perfectly. So this is going to be really key support for those of you guys that trade the NASDAQ. Take a look at the Dow. You know, I think that the Dow could reach up for this, you know, upper end of the channel, which is, you know, 32,500, something like that. But I want to go over to precious metals really quick because, you know, it'd be remiss if we didn't follow these, because this is going to be, you know, exact opposite in my view of whatever the dollar does. So, you know, you see the dollar go down, you know, precious metals are going to bounce. You know, you see the dollar go up, and they're going to really suffer. And the problem is with like gold and silver is we're near such critical levels of support. So with gold, you got that 1675, 1680 level. Remember, these are spike lows from way back in 2021. You know, way back in 2000. That was just last year.
I actually mentioned this one on the flow show. Blake, we're 40 ticks away from it, 40 odd ticks away from that level. That's good range for the Fed. You know, that could be a real crucial level down there, and maybe one of the trades for the FOMC tonight.
Yeah, I mean, I think well, this is the point I made. I think I said this to the ForexAnalytix community yesterday in the Morning Edge. I'm like, look, following the Fed, if for some reason gold is trading below 1670, let's just say, following the Fed, whatever I'm doing, I won't be short the dollar. Let's just put it that way. If gold is breaking down, I will not be on the short side of the dollar. And I do have dollar shorts running into today. They're not big. Now my position sizes have completely been reduced, but I would actually not want to be on the short side of the dollar if gold is breaking down. So that's just my opinion there. And then silver, let's also not forget that silver is holding barely above the 618 retracement of the, you know, post-COVID move, you know, the low to the high. We're at the 618 retracement. This is a big fib level, but the scary thing about silver, and I know you don't want to hear this, Stelios, but the scary thing about silver is it has not been able to capitalize on this support, off of the support, and that's scary. I mean, if you're long, which, you know, we have a long, you know, 618 fib pattern in play here in the ForexAnalytix community, it's really not, and it really needs to start moving like yesterday. It's not, right?
Well, the gold silver ratio may have turned. That would work in its favor.
And you pointed that out today, and I think that's really important that that you guys, you know, that you pay attention to that gold silver ratio, because if silver can finally outperform gold, that would be bullish for precious metals, right?
Yeah.
Typically speaking,
for sure, at least for silver.
Yeah,
silver just, you know, showing relative strength.
Do we have?
Yes, durable goods.
We do have durable goods.
Thank you very much. All right, so let's grab that data. Here's the data flash. So let me go ahead and just pull up the dollar.
I shouldn't think it's going to be anything, you know, for the Fed picture. We've seen the market moving on data, so, you know, expect the unexpected.
Yeah, you're right. Data does matter. I know we've been saying it all year this year that data does matter, because people have not been paying close attention going into this last year. But this year, every piece of data matters, because it can influence central banks. So
on Star Trek, data always mattered.
That is right, and that's, you know, and flip phones still matter.
Sorry, right. I think my jokes are fun.
You know, hey, Star Trek will make the Motorola Razr cool again one day. All right, durable goods orders. You can see them coming in a little bit better than expected here. Well, downward revision on the core. It's not really moving the market a lot. All right, hey, before we go, and I know Dale, you have an interview coming up.
First time guest.
First time guest. All right, that's exciting.
Yeah.
Well, make sure you guys stick. I always like the first time guest. I want to hear what this person has to say. I do want to point out just one level that I'm watching very, very big, and then I want to go around the horn and see what you guys are watching. The Aussie dollar. This is make it or break it today. Above 70 cents, I'm super bullish. Below 70 cents where we're at right now, and I'm a little nervous about holding any longs. And I've got longs, just so everybody knows. I've been long the Aussie for the last couple of weeks. I've pared down my position to where it's manageable into the FOMC, but I'm going to get very bullish above 70 cents. So Ryan, what's your best idea ahead of the Fed today?
Best idea of the Fed? Scan your charts, pick your levels, knock out the ones you don't want to trade, stick to the strong ones you do want to trade, and see what the market does.
That didn't help me at all. All right, Steve, what do you got?
What Ryan said.
What's that, Steve? Sorry.
What Ryan said.
I'm sorry,
you're getting
Steve. Everybody's
like...
laughing. Say it one more time.
I agree with Steve, Blake.
What do you say?
There we go. That's three. That's three, Stel.
He agrees with me that I agree with Ryan.
Yeah.
Sucks. All right, Stelios, what do you got?
Well, make it 4, Stel.
I got nothing.
God, you suck. K-Man's got something. Come on, K-Man. Throw me a bone.
Yeah, I agree with you, Blake.
You agree? All right. Well, Dale, what's your best idea going into today?
That's the thing. Trade the US 10s, in my opinion, for the dollar, and dollar yen may be the cleanest one to trade. If we go back above 280.85, dollar yen should trade higher. Break below 272, 275 on the 10s and hold. Dollar yen should be lower, and watch for the medium term. Watch those 135. I was saying on the flow show, 40-60 zone is going to be important.
Very good.
We have one professional. There you go.
Thank you for being so helpful today. And Dale, what's your best idea going into today?
Yeah, but the thing is, I need to say something bearish dollars, because you guys are perma bears dollars, so I need to say something bearish dollars.
Yeah. I would, it doesn't have to be today, but I would try the euro at par 70 with stops under the low.
So you want to be a buyer, the euro down here at the 618 retracement.
Yeah.
Makes sense to me. All right, hey guys, I want to wish everybody very good luck today going into the FOMC. We had a really big turnout as far as listeners today on I know it's middle of summer, but it's a big high impact day today. So please trade carefully, trade small, manage your risk. Don't let trades get away from you, because if they get away from you, it's hard to make it back when things start working against you in these type of environments, especially with lower liquidity. There's no better place to be than in our ForexAnalytix community. So make sure you check us out when you get a chance. Hell, jump in today. It's only $1. You can be in our chat room, because you get the premium version of ForexAnalytix, and you can try it for the next 10 days. So with that being said, Dale, have a great interview today. Good luck, everybody. I'll see the ForexAnalytix subscribers. I'll see you on the Morning Edge in about 45 minutes. Thanks, Stelios, Steve, welcome home. Ryan, Kman, Dale, you're always the best.
Cheers, guys.
Oh, wow, but thank you, man. And spend $1 and forego that order of French fries. Be good for your belly and maybe better for your wallet. So I have Rich Miller with us today. Rich is a former floor trader and self-taught coder. Rich, welcome to F.A.C.E. It's a pleasure to have you here. It's waiting for you I'm going to ask you to unmute. How are you, buddy? Can you unmute?
I think I'm there now.
You are, Rich.
Okay.
Welcome to F.A.C.E.
Good morning, and thank you for having me.
Great to have you, Rich. Are you going to be a screen sharer today?
Sure. What do I got to do that?
Okay, just scroll at the bottom of the screen. You'll see a green button, screen share.
Oh, screen share. Gotcha. And I will share. Oh, I share screen one. I guess that's what I'm on. Share. And now you see my charts here. My
Got them
ES
up there.
charts.
Yeah, Rich.
Okay.
So Rich, before we get going on the markets, Mandy recommended that I reach out to you and interview you, and Mandy
She's great.
is a pro, and so when she recommends someone, I go for it, and I've had a few conversations with you. But before we get to the markets, it's always interesting hearing about someone's journey and how they ended up where they are today. You want to jump in the time machine and tell us what your first gig in the business was and what you're doing just prior to that?
Well, I was in college just prior to that, and in 1982, I got a job on the floor of the CME on 222 Riverside Drive.
Oh gosh, I worked there too.
Yeah, right. And was a runner, and the 1982, same year the S&P started trading at the Merck, and I clerked and did out trades and worked my way up, and finally got an opportunity to trade, and I started trading options. I started actually in the cattle options pit.
Okay.
And because I was working, and it worked out that I could trade during the day during the cattle hours, because they were just a few hours a day. And from there, I moved into the S&P options pit and traded there for several years. And in 1995, we had a really low volatility year. I mean, I go back to show the charts to people that, we had weeks where the market traded like $2-3 for the entire week.
Wow.
So I had started trading electronically on the Globex system in its early days. And so I had an opportunity to work and promote Globex, which I did for 9 months, and really learned a lot about electronic trading. And then I went back to the floor and traded in the NASDAQ pit and traded options and futures there. And then
ever have a bad out trade, Rich?
Yeah.
Huh? So explain to people what an out trade is when you're a floor trader.
When you're a floor trader, you're yelling and screaming, and you're writing on your cards who you're trading with, and how many contracts you're trading, and the price you're trading at. The worst possible thing to happen is miscommunication, and you don't buy as many contracts as you think you bought, or the market goes up and you sold some on the way up, and you come in the morning and somebody doesn't know your trade, and it's they're 9 times out of 10 they're bad. I think you probably remember it that way too, Dale.
Yeah.
And anyway, that obviously doesn't happen with computer trading. Of course, they have fat finger errors with computer trading, where people meant to punch in 1 and they punch in 10 or 100 or 1,000.
Right.
I mean, you still can't have errors, or you can. I do a lot.
There were people that lost their seats on a bad out trade.
Oh, for sure.
I remember. You come in the wrong way to one good morning, your career is over. So anyway,
and in later years, the traders got to where they had trade checkers that would check their trades all day.
Right.
And that eliminated a lot of the problems. But in big pits like the S&Ps or the Eurodollars upstairs, where people were yelling and screaming across a big expanse, there were some nasty surprises sometimes. And
did you ever knock Danny Top Step Trader off his step into the middle of the pit trying to get something done? Danny Riley?
No. And in fact, I'm actually doing some stuff with Danny Riley now. I've known Danny for over 30 years. He's a great guy, and he's a rough and tumble guy. A lot of the guys in the pit. I mean, there were ex-football players, ex-hockey players. In the Eurodollar pit upstairs, it was like stepping into a different planet, because they were all over 6 foot tall and like 250 pounds.
It was pretty physical in there.
It got very physical.
Financial rugby. Okay, so let's come back to the present.
Well, so Go ahead.
Well, you know, in our conversations, I really admire, you know, we're the same generation, and you know, to learn something new is kind of difficult. You know, an old dog, it's hard to teach him new tricks, but that you were passionate enough about developing your system for yourself and for others that you learned how to code.
Yeah, actually, you know, things weren't working, and I wanted a better, you know, some quantitative statistics behind, you know, some of my trade ideas. So I actually called the guy who used to program for our options group, and I said, "Hey, Dave, I want to do this." And he goes, "Rich, that's great, but you can't hire it done. You're gonna have to learn to do it yourself, because you'll hire somebody to do it, and 2 weeks later they'll come back with an $8,000 or $10,000 bill for coding something for you, and you'll say, that's not what I asked for." I said, "Well, the only thing I know is a little bit of Excel." He says, "Fine, go to it." So about 4.5 years ago, I took some online courses and started learning to code in Excel, and now I do Excel and VBA. And in 4 years, I probably put about 10,000 hours of coding in. I'm an expert Excel coder, and I'm not too bad at VBA. So between all that, I can do pretty much what everybody can do in Python. There's advantages and disadvantages, but I actually have some programs that I run every day for my people. I have a gap program that gives opening gap statistics and probabilities on whether the gap will be filled or not filled, based on a lot of different factors. And my newest program, I'm just getting pretty operational, actually takes a look at the trade throughout the day during each hourly period, some shorter periods of time in the beginning of the day and longer in the end of the day, and gives statistical probabilities of the market, you know, going higher or going lower based on what happened. And
is that also kind of a short-term program? Like
it's a short-term program.
Because you know, the morning gap, of course, is a short. It's not something you use to put on a position trade. It's for, you know, an hour or so, right?
Yeah, this is yesterday's price action in my. I look at the first 5 minutes and then an open range trade, which is 25 minutes to me. And there's a whole reason why I use that. And then the first hour, and then it goes 10, 11, 12, 1, 2, 3. And I'm still working on the last 30 minutes. And then these numbers this is the range, and then it generates these open and closes relative to the range. And then there's signals that are generated according to where that is in the range. And then I have trigger prices that are in here, and some of this coding I still have, you know, work to do, and I look at the range analysis of the entire day, and I'm building statistics down in here, and I have statistics in other programs already to tell me at the end of the day, you know, different probabilities, and then all of that information generates, you know, a probability based on a bunch of factors. And I black this out because I have static numbers in here. Probably within a month, I'll have more dynamic numbers that'll change. But there's so many different variables to look at. This program looks at like hundreds of variables. Like my morning gap program, I'll flash this out here. I've already kind of loaded this up, but this looks at where the open is, what was happening yesterday, you know, whether it's a partial gap or whether it's a full gap. I've got so many different variables that I can look at.
Do you ever feel overwhelmed by your own data?
Yeah, I do and I don't. I mean, I understand it, but you have to, and what I'm still learning to use a lot of the data that I have. I have so much data though, that people will ask me a question about something and I'll say, oh yeah, I can look at that. Like I do, there's a lot of seasonality. You know, you can look at the days of the week. You can look at months of the year. I can eliminate years that I don't want to, you know, what happens if you throw like 2008 out? How does that affect your statistics? What if you throw out 2020 where we had, you know, crazy stuff with COVID? I am really big on looking at, especially in the stock indexes, at volatility levels. And I'm tailoring my program to like look at the market at different levels of volatility and how it behaves accordingly. You know, if volatility goes up and it gets over a certain level, what happens? If it stays under a certain level, what happens? And it makes a huge difference a lot of times in the statistics. So I've actually built a VIX futures program that, and I have all the VIX contracts all the way back to 2005, and I've eliminated some of them, and I actually look only at the VIX from 2008 forward, but it's still, it's a tremendous amount of information, and that program has about 4 million bits of data in it. And you know,
you getting any cues for today, Rich, on the VIX with the Fed meeting?
The VIX program, I haven't. I'm working really. I have nothing on there yet because I haven't really even started using that program. I've put the static data inside of my NASDAQ gap program and my NASDAQ and SPU range programs, but that's my next big project, which I'll probably be starting in about 3 weeks to work with the VIX only. And it's
do you trade on big red event days like the Fed today and the press conference, or sometimes the inflation number has become the big deal? Anything regarding inflation?
Absolutely. You know, I usually, sometimes depending upon what's going on, I'm a big options trader, so a lot of times I'll wait until after the number to take a trade, because you know, volatility is usually pumped up before the decision, and then after the decision it comes caving in, and you know, depending upon which way the market moves, you know, I'll put on positions, you know, accordingly. But there's a lot to I still have a lot of work to do, and you know, because I program, I'm always improving what I'm doing and always learning from what I'm doing. And like my gap program and my range program are in, like, you know, in four years, they're in like their 10th iteration of, you know, where I started. And and I've actually broken both of them down into like 2 different programs to like look at the best of all programs in one. And as I say, I keep improving and gaining insights based on what's happening. And hopefully I'm just looking to keep myself out of poor trades. Like when I find a trade that's a 50-50 trade, it's like a coin toss. I won't touch that. Sometimes a 60% probability trade I'll take because I have supporting chart numbers of levels that I like. But most of the time I don't like to take a trade unless it's, you know, statistically showing 70% or better in my favor. The other thing I do, Dale, is just like you, we're old guys. We probably looked at charts for, I mean, I've been sitting in front of a screen for over 20 years now. You know, we what, 50,000 hours, 100,000 hours of charts. Yes. I actually created my time fractal theory of charting, and all my charts are color coded. I use standard deviation levels because they work, and there's a lot to be said about that. And then I have a modified Fibonacci levels that I use, and then my time fractal levels, like this is a time fractal level, and they work exceedingly well. Like here's a time fractal level that we got up to and tested the other day, and I left it on, and every day these things change. But they're really easy to learn to do, and they're amazingly accurate a lot. And
do you teach all these things to people?
I teach everything. I started a website about a year ago. And the name of my website is Handelstats, Handelsstats, and Handel means to trade in Dutch, because the Dutch were great traders, and the first publicly traded stock in the world was the Dutch East India Company, and the first recorded market mania was the tulip bulb mania. So hence,
interesting.
Hence, that was the inspiration by using Handelstats.
Must have been tough getting around the pit in those wooden shoes, though.
Yeah, and here's this is my website. I just did a study earlier this week. SPX is the low end for the year, and when I do studies and I post them on my website for subscribers, I have PDFs and Excel spreadsheets and things that people can download and look at. And I've got lots of videos on a lot of things, and I put a weekly outlook out, and every day I put out 7 sheets of data. And I give out a free sheet on the basic membership, but then I have these pro daily files, pro webinars, and I'm actually building an options site. And when people come to me, I do a morning opening session every morning, and then I can answer questions, after the open, and we go through whatever we're doing that day. I'll answer anybody's question, and I'm pretty accessible. I don't have a lot of subscribers, but I care about the people that come to me, and I care about my programming. I'm pretty enthusiastic about what I've done.
You are, man.
Well,
you're you could go on, and I could tell you still, it's amazing. You still have this level of passion for the industry and the markets after all these years. And I just haven't met too many people. The one common thread I see in successful traders is that they all really work very hard, and they all really put in the time, whether it's going over their analysis or building up systems. And I think the most important part, and you talked about things that you did on your own, is that there's some creativity to it too, where you may see a better way to handle certain numbers and input what you see, your trading intuition has led you to. So it's you're a hardworking guy, and I don't think that people could go wrong having someone like you to teach them.
Well, thank you, Dale. I appreciate that, and it's really true. Trading is a lot of work. You got to be passionate about it, but it's also good because there's nothing in the world that takes place that doesn't affect trading some way, shape, or form. So, one of the reasons I went this quantitative route too is because everybody's got ideas about, that happens such and such and such, it's percentage of the time. Well, when you put a quantitative test to those ideas, sometimes your perception is wrong from what the reality is. And that's one of the things I like about going the quantitative route. This is what we're looking at right now is my screen. I every morning I come out with, and these change as the morning goes on. This was like early on. I was looking at where in the ES we're now bordering a full gap, and my ES says that if a full gap, like with 34% probability of going back down and filling, it's not going to happen. And anyway, these are the kinds of statistics that I put out.
Start the day with.
Yes. That I start the day with. And like yesterday when we gapped lower, my statistics said, it was like such a high probability that it wasn't going to go back down. Like here's NQ This was a little while ago. Full gap up means that we're gapping above the prior day's high. And in this situation, it's saying that, and I ran this like before I came on earlier, saying that there's only a 28.71% probability that it will go back down and fill the gap.
Low probability.
Low probability. That means it's not going to happen. I mean, but then I actually break this down into time periods. So sometimes even if it was a 50% probability, I know sometimes that it'll tell me that it will happen after the first hour. So, you know, if even if you think you want to trade it, you know, contrary to what it is, you at least
it'll tell you to be more patient and wait.
Tell you to be more patient. Exactly. Okay. So that's what, you know, and then it gives me statistics on the probability of going to the prior day's high, at least, you know, filling to the high. Like in this case, it said, you know, 56%, you know, earlier, that it will at least go down and fill the high. And some of the stats, you know, sometimes I scratch my head and wonder how they come out the way they do. But, you know, the stats are what they are. And of course, it is what you program into it. And there's so many factors. Like last week, I don't remember what day it was. It was like a 60% probability. And I said, well, let me see, you know, what day of the week it is. And so I plugged in the day of the week, and it totally, you know, it went from like 60% to 80% that it would fill. And I don't remember whether it was up or down. I mean, Dale, we've been around for so long.
Don't remind me.
Yeah, but really, and I tell this to people, and you'll understand this, is we've seen so many things happen before that, you know, there's nothing that really surprises us.
Yeah.
You know, whether it's a big,
because we accept anything and everything happens.
Exactly. So yeah. I mean, and then I mean, sometimes it keeps us from making a trade, and sometimes we say, well, that could happen.
Yeah.
One of the things that I've learned most, you know, especially using the options pricing model and standard deviation levels, is that events happen a lot more often than they're you know, supposed to. That the options pricing model, you know, is wrong, and there's a reason why they don't price that in. It's a longer conversation than we have time for this morning, but nonetheless, it works the vast majority of the time. So you got to go with what works the vast majority of the time. And I'm
seeing you were a little worried about this presentation. It was people are saying that this is the best presentation that they've seen on F.A.C.E. Someone like you know, usually I've got guys coming on that are making forecasts with their charts, but Jay says, unlike anything I've seen ever on ForexAnalytix. Great find, Dale. So, you know, I want to thank you, Rich, for coming here and enlightening, edifying our community, and showcasing your work here today. And having made it through an interview with the, you know, kind of ornery, whatever it is. So you're now my trading warrior brother. And, yeah, do you accept it?
Thank you, Dale. I appreciate it. I really, you know, thank you to Mandy for like suggesting me, and thank you for reaching out to me. I'm here anytime. I really am passionate about it. Anytime you want to talk to me, anytime you want to interview me, I'll be glad to show you. And as time rolls on, especially when I get that VIX study done, there are things that are going to take place there that are going to absolutely be astounding. I've already got some pretty astounding stuff with that.
Yeah, like an 80 VIX before it's over.
Yeah.
Okay, I know. I see what you see. All right. So yeah. Anyway, let's keep that for now, and I'll get in touch with you, and we'll schedule another one in the fall. And the best way for people to reach you, Rich, would be what, through Twitter or going right to your website?
Go to my website, which is handelstats.com. And
there it is.
on Twitter, I have a public Twitter is Skylane TK, SKYLANETK.
Okay.
And my private Twitter is Handelstats, but I use that. I don't like to send out emails. So I like what the people that get my service, they get like, some of them have never gotten an email. I put out all my stuff on my private Twitter channel, so they can come and log in and download the information, and they log in, and I've got a room now that I've just set up recently with Mr. Topstep, because there's advantages to doing that compared to what I was doing. And
Okay.
anyway,
we're rooting for you and all who hear your words and absorb your work, Rich, and good hunting today. What's the Fed going to do?
I don't think they're going to do anything. I mean, it's an election year, and I heard you guys talking about bonds and notes, and I'm like the same way. I watched the TNX, and I think rates are going to go back down. I think that inflation, if we can get energy prices down a little bit, that will put a hammer on inflation. And I actually, if we get a poor close in crude this week, I don't even know where crude was.
Yeah, under 94.
It's actually my crude chart that I've been saying. I'll pull this up real quick.
We got to run, but
if crude gets down here under 80, closes down lower than last week, it's probably going to go to 89, below 89.45. If it gets below 89.45, it is going to 71.
Okay, good to see that.
That's
all right.
Thank you, Dale.
Well, and that President Biden be very happy to see your work manifest down there at $70. So would a lot of people driving around this summer for their vacations. Appreciate it, Rich. Thank you so much for your time today, buddy. Good hunting. And that's a wrap. Everyone, remember, don't just count your statistics, and don't just count your pips, count your blessings. We'll see everyone tomorrow. Good luck today. As I say, I'd rather react to the reaction than predict it. And we'll see everyone tomorrow. You could join the team in 13 minutes for the morning edge. Thanks again, Rich Miller. Adios, everyone.